So today I'm going to talk about 5 stocks to watch. Now these 5 stocks are classed as the gems of the stock market, and I would generally say that you would want to have at least one of these stocks in your stock market portfolio. They are the big tech. These stocks have big moats. Most of them are very much generating a lot of good amounts of cash as well, and we're going to go through these today. Now the reason why I'm going to talk about these 5 stocks is because only 12 months ago, I'd say 12 months ago, we started to have the crack showing in the stock market. We started to have some of the smaller caps, some of the mid caps, some of the more high risk-on stocks started to show a few cracks, and them stocks, as a lot of you guys would know, started declining 12 months ago, and they've just got worse and worse. But during that period of time, these 5 stocks were untouchable. These stocks were putting in new 52-week highs, and it isn't until recently, in the last 6 months, that these stocks have started to join the whole of the stock market that's been having a bit of an ugly period of time. And in my opinion, it's very important now not to be ignoring these stocks, because it's quite easy to be focusing on the stocks that have been falling for the last 12 months, that are already at 52 close, that are, for some of them, the lowest valuation they've ever been at, prices that were last at in 2018, that it's quite easy to be focusing on them stocks. But these stocks are having 10-20% dips. The share price is flatlining for a long period of time, and for these stocks to have them sort of dips is quite rare, and it's some of the best stocks to be owning. And a bit of a reminder not to forget these stocks, so keep watching them, because these stocks are some of the stocks you want to have in your portfolio, the gems of the stock market, and are having quite a bit of dips at the moment. And I remember a few months ago, or even longer than that, when a lot of people were going, you know what, I'd love to own that company on a 10% dip, a 20% dip, and now they're happening and people are kind of ignoring it. So we're going to go through these stocks, so if you could hit the like button and we'll get started. Now these stocks are what are called the f.a.n.g stocks, and obviously f.a.n.g is spelled F.a.n.g. Now recently there has been another A added to it. Now sometimes it's not spelled like that, sometimes you will see it spelled like that. The reason why you sometimes don't see it is it just doesn't look good, let's be honest. So these stocks, and this is a little bit awkward now because this one's changed its name. So the F is for Meta, and just a little bit of a jump forward there, I thought, right, I'm all down rather than you guys watching me. And then the other A, we've got Amazon, we've got Apple, which is the kind of the new one that's been added in. Well, I say new one that's been added in. I think really for the last 5 years it's been accepted as one of the f.a.n.g stocks. Netflix and Google. And like I said, these are the big techs of the stock market. 5 stocks that you potentially want to own in your portfolio. I say that for me personally, I would own at least one of them. There's been a few questions whether or not Microsoft does get added to this list, but I'm not going to add it in today. And we're going to go through these 5 stocks because I think something really interesting is happening with these stocks at the moment, and you want to be keeping your eyes on these. And I'll be talking about which ones I think are good value, and the ones that which are maybe a bit lower would be more interesting for them. So we'll take a look. And just before we start, if you are on the Patreon, there is an exclusive video out there to go watch. If you are not, then you can join by the link in the description. It is only £5 a month, and you get 2 exclusive videos at least a week on there, a Discord with 600 members on, and one of the exclusive videos we just dropped is a new series called Stock Request, and this comes on the Discord, where members of the Discord suggest stocks to put forward, the ones that get the most likes. I will do a 5-minute review on, and this week Google, Airbnb and f.a.n.g won it, so there is I think it's about 30 minutes long video about them 3 stocks on the Patreon and my views on them, so do go check that out if you are on the Patreon. But we'll get started. So first off, Meta, the one that is a little bit awkward now because obviously this was the f.a.n.g, the F, which is now changed to an M. But here we go anyway. Meta. So for me, this is definitely one of the interesting one, and I've seen a lot of value investors jumping on this one and buying this one at the moment. In particular, the reason why this was really the first f.a.n.g stock to show a bit of weakness. It's lost 44% of its value. That is insane. We don't really get that many drops in these f.a.n.g stocks. 44% is a lot. I mean, if we go to the CV times, the peak of CV, Facebook, Meta only lost 30%, and during one of its big kind of Cambridge Analytica stuff, I mean, if we go from really the peak in July, that lost 40%. So I mean, the last time it dropped this so much was in 2018 during the whole Cambridge Analytica stuff, and look how it came out of that situation. If you got at the bottom of that drop in 2018, you would make it over 203%. I mean, even if you didn't get the, this is, I think always people are obsessed with catching the bottom. If we just go like somewhere in the middle of that drop, you could have made over 100% easy, and 100% return in 3 years is pretty good going. So historically, this proves that a drop like this normally is quite a good buying opportunity. It's also valued down at a 15 times earnings, which is I think why a lot of value investors are starting to jump on that one. And I think Facebook at the moment is getting valued at like it's only going to grow 8-9% a year. And at the moment, analysts are predicting 11% growth, and for the next year, a bit of a recovery at 17% growth. But I mean, even if this company was to grow 8-9% going forward, at 15 times earnings, that's not a bad pick at all. And I think there's a potential that Facebook do get back into that, teen range of growth. And if you have Facebook, the company that has such a strong balance sheet, the growth, controlling 4 of the major apps, potentially the leader in the metaverse, down at 50 times earnings, I think, in my opinion, this is definitely a FANG stock to be watching, and it's one in my portfolio for sure, and one I would not be ignoring. Next one, we move on to one of the A's, which is Apple. So for me, Apple is a bit of a funny one. Obviously, Apple, great company, adds more and more income streams, just seems to be taking a little bit more money every year from you for a new product. It always keeps reinventing himself, and it does pay a bit of a dividend yield, which is the only FANG stock I believe that does pay dividend. Yes, it is, and it's 27 times earnings, so a lot more than the likes of Facebook, for example. And if you look at this one, it has held up a lot more compared to the other FANG stocks. Really, it's only been flatlining for a couple of months now. So this isn't having as much of a major pullback than the other ones. It is trading at a bit of a higher valuation. And when you do look at Apple, it does have 8% growth this year, potentially 5% growth next year. So for me, Apple is one of the more expensive FANGs on here. A brilliant company, don't get me wrong, but it's one that, in my opinion, you want to be getting at a lot lower valuations. The metrics are highest that they've ever been for Apple. It's the one with the lowest growth. It's at a higher valuation. It won't grow as much going forward. I think there's better opportunity here in this FANG space, but it's definitely one to watch, and it is starting to have a bit of a slump. So definitely one to keep on a watch list, but a great company as well. But for me, this is one that's just not at the right valuation at the moment. Next up, the e-commerce giant. I guess we call it the e-commerce giant, but I mean, when you consider Amazon Web Service now, I mean, that is just as successful of a company as the e-commerce part of the platform. But Amazon is having a bit of a struggle at the moment. If you look at the share price here, since about July 2020, so coming up to nearly 2 years now, the share price has done nothing. This has had a really stagnant share price for the last 2 years, which is why this one's starting to get a little bit of interesting. Now, the last time that Amazon had something very similar where it had a stagnant share price for nearly 2 years, which you can see here between August 2018 and March 2020, is then when the share price went on a 70-80% jump in the share price, which is fantastic. And this is what happens. There's going to be, in the stock market, there's going to be periods of time where your investments do really good financials, and you look at the share price and go, it's not rewarding me. This is so frustrating. Amazon's a prime example of that. And sooner rather than later, if the company keeps moving revenue and profit in the right direction, this company will be rewarded on the share price jump, and it's definitely one to watch. Amazon has a massive untouchable moat. So many parts of the business are still growing. It's putting in major amounts of profit now. It's still growing at good rates. I mean, what's the growth predicted at this year? 15% and then 17%. I mean, if it could get back into that 20% range, that'd be absolutely amazing. It is a little high at 47 times earnings, but the thing with this company is when it keeps ramping up that revenue the way it does, the amount of profit it's starting to put onto that bottom line, it's not too bad at all. So this is definitely one of the interesting ones for me. I would put this in third place on this list as one definitely that I would be considering. However, in my opinion, I think there's 2 better opportunities on this list than this one, but definitely one to watch. Now, the next one is what I've always called the worst FANG stock, which is Netflix. However, what I am going to say now is Netflix is very much interesting to me. It has had a massive slump like Facebook. Recently, the stock since November time has joined in the whole market collapsing, and it is down 50%, losing 50% of its value. And that now puts the share price back towards the same share price as March 2018, which is massive drop off, considering the amount more revenue they're doing, the amount of profit they're starting to ramp up now, the users they've acquired through all the lockdown situations. And it's currently trading at 31 times earnings. Now, I've always had the problem with Netflix thinking, no, it's always had its own way, it's had no real competition, it has now got competition. However, in the long term, Netflix is still going to be okay. People are still going to use a Netflix platform, and sure, they're going to have to spend a bit more money on producing its own content. It has to keep expanding its moat now, potentially moving into gaming. I think Netflix though is still a solid bet for the next 5 years. You know, I've never been Netflix's biggest fan. You know, if you watch the channel for a long time, you'll know I'm not a Netflix fan. However, there's a point where you realise, okay, I might not be its biggest fan, but at some point the valuation is a bit too cheap on this one. Now the growth projections are 12% and 12%. I would like that to get a little bit higher, I'm not gonna lie. And there could be a little bit of a drop off on the earnings side through this year, and it might recover again in 2023. However, like I said, you know, at some point when you realise, you know, the streaming giant Netflix down at 31 times earnings, back at prices it was in 2018, there's a time where this comes a buy, and I used to think this was the worst f.a.n.g stock, and I generally now think this could be a really interesting opportunity. Don't get me wrong, if I could get it a little bit cheaper, that would be better, and that's probably where it would have to go for me to buy it. However, I am much more bullish on Netflix at these prices than what I were at, say, $600. So this is definitely one that I would be watching. So I would tie Netflix in third place with Amazon, and put Apple probably in last place, because it's just, for me, a little bit too highly valued for me. But this leads me on to the second stock on this list that's my favourite, and I'm actually considering buying a position in this one, which is Google. Now Google has not really had a drop in the share price. If we look at here, I mean, if we go from the really peaks of the run, it is down 14%, so it is having a bit of a correction. However, the share price realistically has not done anything for coming up to about a year. And the financials that Google are putting in are absolutely amazing. Obviously, you get the search platform, you get the YouTube platform. And the last time that Google went on a bit of a share price flatline was around 2018 again, you know, for about a year and a half. And then how did the stock do? Went up over 160%. And I think there's potential that this does go flatlining for a good period of time. However, I think when people do come back into Google, you know, it will go on a bit of a really good run. For the quality of company that Google is, you know, the balance sheet, the profit it produces at 22 times earnings, I do think this is, you know, far too cheap. And if you look at the company's revenue growth, the revenue growth is still going to be very strong at high teen percentage growth, which is absolutely amazing. And you would expect that with the Google search platform, you know, YouTube. And I think down at these sort of valuations, the longer this flatlines and the financials improve, it's definitely really, really interesting to me, and one that I am thinking of buying. And it's definitely my second favourite on this list behind Facebook. So for me, this is definitely one to watch and probably consider buying, in my opinion. So those are 5 stocks that I thought I'd point out to you. 4 that, in my opinion, are very interesting. 2 in particular that I would consider strong buys at the moment, and one that I think it just needs to come a little bit cheaper at the moment. But I thought what would be very important to do is point these 5 high quality companies out to you guys. And just a reminder of, these sort of companies don't really dip normally, and you are starting to have a bit of a dip. A lot of them are starting to flatline for a long period of time, and some of them might be really good fits for a stock market portfolio, you know, high quality businesses. So hope you enjoyed it. If you could, hit the like button, subscribe if you're new, and I'll catch you on the next video.